So we're just doing a mindset session now, and I've had a really interesting question about pullback anxiety, but it's actually become a two-pronged question. So the first part is about pullback anxiety, when a profitable trade then rolls over and then starts to go against you, and that anxiety that you might feel when you've been in the trade's been going nicely and then it has to pull back, and how you deal with that emotionally. And then also, as a second part of this question is about a trade that Umar was in last week on the euro dollar. He was up on it and then was getting stopped out. It happened, he's saying, multiple times, and then got frustrated and missed the whole move on Friday, which was this move here. So Umar, so I can see what you're saying. So you were probably getting in maybe earlier with that last week, and it's coming down. I can see it was making these new lows, and that was probably what was getting you stopped out. And then you missed, for whatever reason, the next time that it came up, and then it carried on, and that was the end of that. Yeah. So we're gonna talk about the stop outs first of all, and then we'll come back to pullback anxiety. Now, what also Umar has just said here is that he's been in a transformation from a trader who is cutting his winning trades sooner and just banking the profits, to trying to become a trader who holds on to his winners. And that is an emotional, mental transformation as well, because if you want to hold on to your winners, you have to expect that your win rate is going to go down. You have to expect your win rate to come down, because the longer you want to hold on to a trade for, then it could have a run, but then they don't always then keep going. So the longer you want to hold on to a trade, then the increased probability that your win rate's going to come down. What you're looking for when you're looking to hold trades for longer is you're looking for those bigger winners to compensate for the slightly lower win rate. Okay, right. So you're saying last week your stops were too close. Yes. Now, if you remember, as you've just said, Umar, that my stops on that euro were giving it more space last week to play out, because I could see on the 4-hour charts that it had that potential to just be probing, which is what it actually did do. Yes. So there's nothing wrong with doing it the way you've done it and having your stops below the lows, but you have to have the strength to then go back in again. A bit like I was just talking about earlier on, that we took 3 S&P trades. I took 3 S&P trades in the trading room last week. The first 2 got stopped, and then the third one had to then take it a third time, and it was the third one that went on, hit its target, paid for the first 2, and a profit on top. So you have to have that strength, yes, to be able to go in again. So how do you do that? Firstly, one thing, do you keep a trading diary, Umar? Right, okay, so you keep a trading diary. Great. So right now, yeah, so you can make notes, and should be making notes in that trading diary that about what's happened with this euro. Take a screenshot of the euro as well to show what's happened, and to show that, because there's nothing wrong. You don't, like I've said, you don't have to have had just a wider stop the way that I did it. It doesn't matter that you're getting stopped out, but take that screenshot, attach it to your trade journal, so that you can refer back to it and say, oh yeah, there's a good proof that if there's nothing has changed, I have to go back in again. If nothing has changed, a bit like I did with that S&P. So first of all, get that into your trade journal, get some red ink on it, make those notes and it stands out, so that you can use that as a resource and a tool when you're going back over it in the future, because these situations will happen again, so you can use it as a reference point. That's the first thing, because when you're in the thick of things, you've got to keep reminding yourself, when you've just had, let's say, 2 stop outs, and then it sort of sets up again, it starts coming back again. Maybe it's you're looking for it to close back inside the bands, or whatever it might be that you're looking for, that you've got to have the strength to say, well, nothing's changed, I've got to take this again. And that's when you start asking yourself these key questions again and say, okay, if I don't take this trade now, I don't want to take it. Emotionally, I don't want to take it right now. A bit like you, I'm talking about you last week. So emotionally, you don't want to take it at that point. But, so in your stomach, you're fearful now, because you've had a couple of losers, 2 or 3 losing trades on it, and you don't want to take it now, and you've been in it before. But you've got to remind yourself and ask yourself these questions and say, well, if I don't take this now, and then it then goes up, will I kick myself? It's that old question. But also then making these statements to yourselves as well, that, well, I know I've had 3 losing trades in a row, but if I take this 4th one, and bearing in mind you can always downsize. Oh, hold on a second, the phone's ringing, I don't know why. Hold on a second. Right, so the when you've had those those few losses and you're going to take the next trade, you can always downsize the position. So that is still an option, because what you can sort of say to yourself is, it's now not about necessarily outright making money. Because let's say you've had 3 losers in a row. So you might say, well, I'm not going to make money from this trade setup now. Maybe not. Maybe you still can. Get a good risk reward and you still can. But what you can also do, because you're feeling a bit queasy towards the trade, is say, okay, well, I'll put a smaller position on. So I've given it 3 attempts, or 2 or 3, or however many attempts it might be. Well, what I'll do is I'll compensate that by downsizing my position. So, okay, if I downsize my position, I'm not going to, I've not got any chance of maybe making back 3 losers. But nevertheless, even with if you go back over my live trading videos over the years, and I know there's a huge back catalogue of those, and I know Kim's finally taken it on. I've been talking to him since December saying, mate, why don't you take this on? Anyway, finally did it, didn't he, on Friday? So if you go back over that back catalogue, there was plenty of examples over the years of where I'd have a couple of losers on the Friday live trading day, and then actually put a slightly smaller position in on the 3rd attempt. So rather than it being 4 units, I'd say, well, I'm just going to put 2 units on this, and then that one becomes a winner. I don't actually make back in entirety, or I don't make a profit, but I might ultimately get back to sort of, that last trade then brings you back to break even. But I've still traded in a way which is protecting myself if that one also becomes a loser. So I've downsized slightly, so if that one also becomes a loser and the whole pattern disappears, okay, well, at least I've lost less on that last trade. So that is an option, and that is something, if you go back over those videos, you'd see in the live trading videos, I've done that plenty of times, where I've had a couple losers and then taken the last one at a slightly smaller position size, just in case it becomes another loss. So trying to contain the daily max loss amount sort of thing. So worthwhile considering that. But the main thing from a psychological perspective, like I just went through, I don't know if you were in when I went through it, Umar, there was a time a couple of years or so ago and we were taking dollar yen trades, and I had 5 losers in a row, and then I had to call the 6th one. That's tough, because not so much on me, but it's tough to call, because you feel like people are starting to think you're going mad. So So again, there's two elements of psychology for myself. There's my own psychology, and there's psychology for when you're calling trades as well. And so there is an element of that. But I had to do it because the setup was there again. Even though you think you're like saying to people, look, I know you think I'm crazy here, but nothing's changed. I've got to take this setup. So that's the first point. There is you've just got to keep reminding yourself of these things. One, remind yourself that if it resets and you miss out, will you kick yourself? Two, that you can, if it resets, after having a couple of attempts on it, you can actually trade it at a slightly smaller position size, at like half size or 3/4 size. And if it then has a winner, then that could still end up paying for much of the previous losing trades, or maybe even get you back up to break even also. So with a good risk reward. But the main point from a mindset perspective is that you've just got to keep reminding yourself, well, look, what if I don't take this trade and it becomes that winner? There's nothing. The setup is here. It doesn't feel comfortable to me internally, but the setup is here. I've been in this situation before when I've done this very thing has happened and I've missed out. That's why you've got to log this in your trading journal so that you can use that as your reference point for the future, because this will happen again. If this happened again to you tomorrow, you wouldn't hesitate because it's fresh in your mind at the moment. But in 5 months' time, when this happens again, then what happened last week becomes more of a distant memory. Unless you've got it referenced and you can go back to that, then you're more likely in 5 months' time to go and repeat the same thing again. Have a few attempts and then not feel like going in again. So really important that you do that and that you burn that image into your brain, basically, so that you can keep reminding yourself, yeah, I've been here before, this sort of thing does happen. It's not necessarily about outright making money now if I've had 3 losers in a row, or even like I'd had 5 losers in a row. But on that next trade setup, if that one still works, it might still pay for a fair chunk of those losses. Maybe it gets you back to break even, or even give you a small profit. Go back over those live trading videos again and you'll see that I still would end up sometimes making a small profit, just not as much as I would have done if I'd have been in with another full-size position. But on some of those videos, if I was down like 700 or 800 quid, I don't want to carry on risking the same amount and then being down 1,500, let's say. So I would have to downsize. But still nice when you get back and you can say, okay, I've not really made any money here today, but I had to look after the risk side of this as well, and it got me back to break even or whatever. Okay. So that's that part. Now, the anxiety that you can feel when you're in a trade, the trade's been going up, and you're sat in it and you've got a target up here. Okay, so here's your target price. So the anxiety that you can get when price starts to pull back is very common, because when you've been sat in a trade and maybe the trade's been going up for the last day or so, maybe it's been, so you start to get comfortable. What happens is you've been in the trade, it's had a really nice run on that particular day, you're going into the next day or more, and it's still up, so you're starting to get comfortable with that position and being up in that position, and then it starts rolling back over. First of all, it's just rolling back, it's just doing a bit of a pullback, but then it's coming all the way back down to your break-even point. You've still got a stop loss, let's say down here, but now you're underwater, as you've said. So you start to feel that, as you've called it, anxiety there, I think you called it, in relation to, and frustration in relation to seeing a profitable trade turn into a negative trade. Now, it's not stopped you out at this point, but you're starting to feel that emotion. Well, again, it's just a case of having to remind yourself that there are plenty of occasions where price will run up and then it'll do deep pullbacks, but it'll still end up going higher again. So what you do is, to help yourself with this sort of thing, is to go to the charts. So, and okay, we could take an example from anywhere. So you could say, well, what if you'd have got into the euro here? Let's say you bought the breakout here on the euro. You've had a lovely run on that euro. When was that? Would that have been Friday? And then it's pulled back into yesterday, and at some point yesterday you're now underwater. You're starting to think, oh no, yesterday morning it's back down at 108.05, and you're all right. Your stop's down here, but you're starting to feel that emotion maybe. But as we can see, the euro held and then went up again. So it's always important to help yourself with that type of frustration, to go back over the charts and look for examples where markets do deep pullbacks, but they actually then hold and then go higher again. I mean, even here, look at the euro down here. So if you'd have got in the euro over here somewhere, you've had a nice bounce, it's come up, but again, let's say you're targeting up here, it's had this lovely little bounce and then whoosh, come all the way back down. You've got to stop maybe below this low, but at this point you're thinking, oh no, look, I've had this lovely run and now it's just going to roll back over again. But look, it doesn't. So again, just when you think it's going to come down, no, it starts to come back up again. And then, so one of the best things you can do to help yourself for those types of situations is just remind yourself, maybe take some screenshots of examples of just this very thing, because it's just like doing a back test really, to show that prices, even when they have a nice run, that was two beautiful candles up there, and yet it gave it back, but not completely, and then crept back up again. So there are plenty of situations where a market will do a deeper retrace but still actually hold and then come up again. So, and that's what will help you with that anxiety of seeing an open profit, like in some of these examples here, disappear but then ultimately come back up again, and it will help you to say, oh look, I've seen this happen time and time again, and take some examples, take some screenshots of that type of thing happening on the sort of patterns that you trade. So take some examples of the patterns that you trade, and then look for when there's been deep pullbacks but it's actually not completely rolled over and it has actually ended up going up again. That will help you with your confidence to say, okay, yes, this could come over and just stop me out, but there are plenty of times where it's just a deep pullback and it will come back up again. So that would be my advice on that side of things. Even on something like this dollar yen, let's go to the dollar yen, and because that down here this morning, isn't it? Yeah. So let's go to this dollar yen on the daily chart. Can you imagine anyone who got into the dollar yen last week, and my word, did it, it broke out. So you got a breakout trader who got in that last week. Now, whenever that was, in mid part of last week, they're going to be sitting there pretty saying, oh, this is great. And now look what's happening here with the dollar yen. It's all the way back over. They're barely in profit from where they bought, but they were in a big profit. So again, you have to accept that these are the sort of things, it's just the market breathing in and out. Now, this could be a complete reversal and the dollar yen's going to completely roll over and go lower. Or maybe not. And you just have to, again, look at the number of times and when markets do a deep retrace after having broken out, but actually do they then go higher again. So if we go to an example of gold, there should be an example of gold where that sort of things happen. So we had here where we had this beginning of the year with wonderful move up, but then gave it all back. Nasty looking candle there, big shooting star candle. Oh no, I've got in here, and and yet actually it ended up working itself out. So there are these examples of where markets look like they're going to come off, but they then hold. I mean, look at this back here. Gold had pulled back here into April of last year. This is genuinely, I was in this trade with our swing traders. So, and gold was coming up. We'd got in down here at 1278. I still remember the price level. Our stop was much lower down. So we got in at 1278, and gold then broke out of the trend line. And you're thinking, oh great, okay, that's nice. We've broken out the trend line. It's a positive. That's good. All looking good. Then it's come back down. You're like, okay, it's pulled back to the trend line. So, all right, that's allowable. You know, pull back to the trend line, break out and pull back. And then it started coming down. You're like, oh, maybe something else is going on now. But, well, we'll have to hold it, and that's just the way it is. And then gradually, bit by bit, over the next week, it's just sort of fumbled around, and then bosh, then up it went. So again, it's a case of just going back over examples after examples, because it's that will help you give you the confidence to say, yeah, it happens. And yes, there are going to be times when these markets pull back and completely roll over. But that's just part and parcel of it, isn't it? If I want to have those bigger winners, I have to be willing to give them the scope to play out and to work out. If I'm not, then, and I just start moving my stop up to break even too soon, then that's just interfering with the trade. Because in some of those examples, like this euro or whatever, if I'd have moved my stop up to break even too soon, I'd have got stopped out of break even, only to have missed out on the next onto the next leg, like on that, like on gold and these examples here. So there you go. I don't know if you've got any questions on what I've just gone through. So the next bit here is, Umar, you've just asked me about interfering with trades as well. So in the past, you've interfered with trades. But again, that comes back down to, Sid said stick to your stop, exactly. But that comes back down to the confidence in your trades. And Ricky's even said that. So you're more likely to interfere with trades if you have a lack, well, I could say a lack of confidence, yes, but also it can come from a lack of experience as well. So experience with that type of trade, that that you're more likely to tinker a lot more. So by having confidence in the setup, that helps you to let it go, to leave it alone. And confidence in the setup comes from, a bit like what I've been talking about earlier on, is going back over these examples from the past, effectively backtesting, to say, yeah, you know, when I backtest, if I can see that if I move my stops to break even too soon, then actually that affects the overall results, the overall profitability, and it won't always, it depends on the setup, but certainly there's plenty of setups where you're better off just leaving them alone, leaving them be, and rather than overly trade managing with things like, you know, getting the stop to break even. So that confidence can come from doing your back testing in that, and then that keeps reminding you, no, I can't do this because this can, like in this example back here on the euro, just taking this here after these lovely two up bars, and you would be, the temptation after those two up bars have put us into real time. You're at this point, you think, okay, it's going now, you know, and I would say that I would be looking at that saying, yeah, that's going now. That looks like it's off to the races now, and because it's been probing these lows, it's then properly getting clear, we've got nice fresh momentum coming in, you would be thinking that, and I was thinking that. Now I think the trade that I called last week, we were already in by this stage. Yeah, I remember this, yeah, because we got up there and we're thinking, okay, this is doing all right, still got a long way to go yet, sort of thing. We knew that it had a bit further to go, but I thought, okay, it's doing all right now, it's broken this last high, we're probably going to work our way higher. And yet, no, back it came. So, but I just I have that experience to know that you just got to let it do its thing, and it is gaining that confidence to be able to not tinker. So at that point is to not move that stop up. If I'd have moved my stop, moving the stop to break even at that point would have been way too close anyway, because break even was at 108. But you know what I mean. Even if the break even was a bit lower down, you just get used to saying no, I cannot do that, because there are these times, like in this example here, where it came all the way back down to what, 107.80 odd down there, before then holding, and then finally off it went. So yeah, not tinkering and having the confidence to not tinker with your trades comes from the back testing, really, and when you are going back over, like I said earlier, taking those screenshots, so that you have some visual evidence. Say, oh yeah, no, I can't touch this, But it depends on the trade setup. Like I said, some setups you can move your stops to break even, and there will be a point where you can move your stop to break even. Some of my setups, I leave them for quite some time, but there is a point whereby I'm allowed to move my stop to break even. So again, that comes from testing the setup, really. Yeah, you're saying each time it rallies on the hourly candle, the next candle fades. Yeah, yeah. Yeah, that's it happens. It does happen, and then of course, then you miss out when it happens the next time, and then it keeps going. What happened after that? Yeah, you still pull back, and then so yeah. Last week you had a session with Keith, and you asked him how you can copy Charlie's mindset. Oh, well, I don't know how he would have answered that. He might have told you. I don't know. I'm not really particularly interested in it. It's a private thing, but he might have said to you about the. Did he talk to you about my mindset? He might have done. As far as the workings of my brain. Yeah, I didn't know if, because he's going to be wanting to work with you. He's not going to be wanting to talk about me when he's working with you. But he might have said about the three personality types that I seem to. He's told me this, that I seem to bridge. We tend to, from a personality perspective, and personality types affect our decision making, of course, and so, using the profiling that he uses, people tend to have one dominant personality type with a secondary one. So they'll have a dominant personality profile. So you might be like a driver personality, for most people who understand that. So you might be a driver personality, which means that you're very focused, you're very ambitious, you don't suffer fools lightly, all of that type of stuff. But you might still have a secondary personality type where you might have a flamboyant side to yourself, someone who's a bit of a show off at times and whatever. So, but that's an example of having a driver person, a predominant personality type with a secondary element to that. But he's always said to me that I'm pretty much equal weighted across the three personality profiles that he uses. So he said I'm a bit different like that. It's not very common. So I'm like, oh, that's handy, isn't it? I don't know what it means, but anyway, yeah, it's so it's a bit different. But I think that in all seriousness, though, that he says that I can draw on these personality points that other personalities won't be able to draw on. So there are times where you need to have that absolute focus and determination, but someone who might be a passive personality type will find that harder, because that's not their natural personality. So there are all these sort of things. So yeah. interesting stuff. But so yeah, hopefully that's been of use there. I'm still recording as I'm talking here, so I can carry on. But hopefully there's been some useful information within that this morning, without me delving too much into mindset as such. We have gone into it, but I've not gone massively into it. But certainly, from a frustration perspective, you've got to let it go. And but from a and the way to let it go is to be able to take those screenshots from the past, go back test that, so you can see for yourself. That will help you get the confidence to be able to say, okay, there's going to be plenty of trades which do go up. And one thing that I do, because I take a lot of swing trades, one thing that I constantly do, even when a swing trade is running for me, I will constantly talk about the potential for it to pull back, so that I'm helping my little brain out in its expectation that the market may well want to do a pullback, and possibly a deeper pullback, so that I'm already mentally prepared for that pullback, because I'm already covering it, even when I'm up 100 pips. But if my target's 200 pips away, then I know that there's still the scope for it to do a decent pullback. So I'm constantly preparing myself mentally for these things. And if it does happen, well, okay, I've already been telling myself that could well happen. If it doesn't happen and the market carries on going towards target, well, that's a bonus, isn't it? So yeah, those sorts of things I do find quite useful. It's constantly talking to myself, reanalyzing the market, saying, yeah, it's doing well, but be like this euro dollar here today. Yeah, if that broke out this morning, great. Yeah, but what have I said to you guys this morning? Yeah, I think it's got the potential to, still looking at the daily chart, to do another retrace. So what am I doing? I'm helping my little mindset out with knowing that, oh, okay, the euro dollar could still do a retrace yet. If it goes up, well, yeah, it's a bonus, but I haven't got anything here at the moment, and it's certainly there's scope for it to do a retrace. But so my mindset is there that, oh, okay, yeah, that could still happen yet. And so I'm already prepared for the euro to come down, rather than me sitting there this morning when the euro's back up at 108.60 odd, just half an hour or so ago, saying, yeah, come on, please go higher, please go higher. I just don't have that type of mindset. That's a beginner's type of mindset. And when I say beginners, I mean someone who might have been, still in trading for up to 5 years maybe, or even longer really, but it's still what I would call a beginner's type mindset, because that's a hope mindset. Oh, please go up, as opposed to accepting that, okay, this market is it's doing all right. If it carries on going higher, well, bonus, yeah, that's great. That's where I want it ultimately to go to. But I'm always constantly expecting it to come down. Now, there are times when I'll take trades where I'll say, look, all the momentum is firing up. This shouldn't want to go down now. Now, that's just part of the analysis. That's not hope. That's just saying, right, this shouldn't want to go back down now. If it pulls back down, I don't want to be in it. That's it. So, and you'll see me do that when I take momentum type trades. But that's a good example there today. And I don't know whether the euro is going to come back down, or this is just noise. Like I said this morning, I'm not particularly interested in that euro chart. But if it does want to pull back, there is the scope there. And so I'm already, like I've been saying, mentally, that could easily want to pull back within those bands, and that's all it would be potentially doing. Could still then come back up again in another couple of days. So okay, that's doable. So, and then you're not allowing yourself to be dictated by the current pricing of the chart. You're actually already saying, yeah, this could come back down to the low 108s easily. So, and you feel much more at ease towards it, constantly preparing yourself. It's the old adage, under promise, over deliver, and you do it to yourself. That's the way to do it. So you're constantly under promising to yourself and saying, yeah, this could come down, this could do whatever, and if it does come down, yes, there's a scope that it might want to stop me out, but I just have to accept that. That's part and parcel of it. But certainly it has the scope to pull back down more yet, and it could then still come all the way back up. So I've just got to put up with the fact that it's in a retrace, let's say. And the more you do that type of exercise, then the easier it becomes in holding on to those trades, even when price is pulling back, from a mental perspective. And there you go. I think I've said enough now. You're going to remember more than I am on that one, Umar. Yeah, I'd have to go back and watch it myself, but yeah, well, maybe that might well have been I don't know, the dollar yen trade I was talking about from a couple of years ago or so ago. Yeah, it moved 200 pips in a day, right? Okay, but yeah, I think, and it bounced back all the way. Yeah, I don't know. I'd have to go back over the. You're saying that was on the first update, right? Okay, yeah. So I'd have to go back over and watch that because I don't tend to go back over and watch this stuff. But I'll take what you're saying there. Yes. But you have to have a strength of conviction, and that would have been the case with that dollar yen. Oh, okay, yeah, and it came all the way back up. Yeah, okay. Yeah, and I think you have to have. It's very easy on the challenge account to have large drawdowns, because when I'm risking sort of up to 5% per trade, then you have a few losers and you're down 20%, 25%. It doesn't take much. So you have to have that strength of conviction in your trading. Now, as you're talking about the challenge there, that's speculative, because I don't recommend people, as I've said it many times, to risk 5% per trade, because it's too, for the majority of people, it's going to be too emotionally tough, and to see those big swings like that. But even forgetting risking 5% per trade and risking 1% per trade, if you have a few losses in a row on the same market, like that example of the dollar yen, I need to have a look at this dollar. Talking of which, I need to have a look at this dollar yen. I do want to have a look at this. Now we're seeing the euro pulling back, I want to have a look at this dollar yen, because that's what I've been talking about today as a potential trade. So I do want to have a look at that in a minute. So you get a number of setups like that in that dollar yen. I'm assuming that was that same time, the one that I'm thinking of a few years ago, and you've just got to have that strength of conviction to go in again if it's resetting, and there's nothing's particularly changed. It's just resetting, and that's tough. I know that's very, very difficult for a lot of people to do that, and so euro dollar is a good example of this. Actually, let's go to like a weekly chart of the euro dollar. Now, for the last sort of 18 months or so, yeah, the euro dollar has been in this funny price action, very overlappy, as you can see, but generally been making its way down, making new lows. And I've had some profitable trades out of this on a swing basis, but generally speaking, it's been diverging throughout all of that. But all that's happened is the divergences have continued, but the price it's had some bounces, but then just rolled back over again. So I've had numerous losses on swing trades on the euro dollar. I've had some that have made, and I've managed to get eventually stops to break even or taken some profits off or whatever as well. But there's still been a number of losses over that period. But as far as I'm concerned, I have to stick to my guns as far as a trade setup's concerned. So, and it's no different with, whether it's a day trade or whether it's a trade off a 4-hour chart or off a weekly chart like this. You've got to have that strength of conviction, because if you miss that last setup, a bit like Umar's saying there, you miss the last setup because you've just lost it from an emotional perspective, and then you go and miss that entire run that would have made back your losses and more, then you just become a statistic. You're just another one of those traders who says, "Oh, I should have, would have, could have." So as always, it comes down to the strength of your conviction, your confidence, and you build all that confidence from doing all these things that we've talked about, from both a backtesting perspective, but also from a mindset perspective, and working on that as well, so that you can get that confidence. Because you don't want to be that person who's hesitant all of the time. That doesn't help. Or saying, "I knew it was going to turn, so I came out early." I mean, that is one of the worst. I've heard experienced traders say that sort of nonsense, and it is utter nonsense. No one knows 100% what's going on, what's going to happen, should I say. It's just a case of we're just trading the probabilities and the patterns that we're trading, and having the strength to stay with those. Traders start to justify why they've taken actions they've taken. "Oh, I knew it was going to do this. My indicator said, oh, it's going to turn." Yeah, your indicator is giving you a probability of it turning, but when someone says, and I've heard this recently, "Oh, I came out early because I knew it was going to go lower." No, you didn't. It may have helped you out on that occasion, and maybe it did. It did go lower, and so you did cut the position early, and you saved yourself 10 pips or 20 pips or whatever. But in the long run, all you're doing is you're setting yourself up for failure, because the next time it happens, or the time after that, won't be like that. And you'd have come out early thinking you're being clever, and then what happens? The market turns, and off it goes. It ends up becoming a great big whopper of what would have been a winner, and you haven't participated in that. So it is a case of letting go, and of a lot of this stuff emotionally, and just letting it be what it does. It does. Let it be as much as you can. Now I have to hold my hand up. There have been times over the years where I've had a succession of losing periods, and I've been sat in some nice winners, and then I've just said, right, do you know what? I'm going to bank this winner. It's don't get me wrong, it's already beyond 3-to-1 risk reward, but I'm going to bank it because I need to pay for some of these losses. And so, I've done that. So what have I done there? I've taken the losers that I've had, and then said, well, I'm a bit of a drawdown here, but I've got that lovely open winning position there. I'm going to take that. Now, okay, I can justify it because I'm up well above 3-to-1 risk reward. So, by the time you start getting up into those sort of levels, then you can sort of do what you like. But it still hadn't actually got to my actual target. So I've still come out early there. So I have to hold my hand up that I have done that. I've not come out early. It was still a very nice winning trade, but it still hadn't quite got to its actual the level that I wanted to see if it could get to. But I've had to take a portfolio approach to my account and say, actually, right, this is my hedge, so to speak. So I'm now going to bank my hedge. So there are times when I'm going to do something like that, but generally speaking, from trade to trade, then yeah, you've got to just let your trades just do what they're going to do. Anyway, I think I've rattled on now. I'm 44 minutes into this recording now. I've got to be careful that it's going to become a very, very long file. Let's press pause a second. Okay, I think that's about enough on the recording here, so I'm just going to press stops, and that's done.